Here's a summary of Upwork's UPWK Q3 2025 earnings call, designed for easy listening. Introduction and Safe Harbor. The call began with a standard Safe Harbor statement, reminding listeners that forward-looking statements are subject to risks and uncertainties, and that actual results could differ materially from expectations. CEO's key takeaways. Hayden Brown, turning point for Upwork. Q3 2025 marks a significant turning point, with the company achieving gross services volume (GSV) growth after 5 quarters of headwinds. This turnaround is attributed to their strategy for the AI era. GSV growth. GSV grew 2% year-over-year in Q3, and the company expects this positive trend to continue and accelerate in 2026. Record financial performance. Upwork exceeded $200 million in revenue for the first time, reporting $201.7 million. GAAP net income was $29.3 million. All-time highs in profitability. Adjusted EBITDA reached a record $59.6 million, with an all-time high adjusted EBITDA margin of 29.6%. AI as a structural beneficiary. The company is a structural beneficiary of the AI era, helping businesses address skill gaps. 95% of Gen AI pilots fail and realize the potential of AI. Key growth drivers. AI native platform. Investments in Upwork's AI assistant, have made it more embedded in workflows, aiding in talent sourcing, proposal drafting, and project management. Recruiters saw a doubled acceptance rate, and proposal writing increased by 15%. AI-driven search and recommendation improvements are expected to contribute $100 million in incremental GSV in 2025. AI category growth. The number of clients engaged in AI projects surged by 45% year-over-year, with GSV from AI work increasing by 53%. 41% more professionals are engaging in AI projects. Upwork Business Plus. This tailored SMB product saw strong adoption, with active clients growing 36% quarter-over-quarter, positioning Upwork as an AI equalizer for small businesses. Enterprise expansion. Lifted. The launch of Lifted, a new subsidiary, signifies a major milestone in unlocking the $650 billion contingent work market. Lifted offers talent sourcing, contracting, and workforce management across all contingent work types, a unique and comprehensive digitally native solution. Early demand for Lifted is strong, with onboarding of first customers expected in early 2026. Momentum. Q3 was historic with GSV growth and the launch of Lifted, signaling a new growth chapter for Upwork. CFO's key financials and outlook. Erica Gessert, Q3 2025 financials. GSV, $1.02 billion, up 2% year-over-year. Average GSV per active client grew 5% year-over-year and remains over $5,000. Spend per contract increased 12% year-over-year. Active clients, 794,000. GSV per new client grew 7% year-over-year. Churn rate improved over 70 basis points quarter-over-quarter, reaching a multi-year low. Revenue, $201.7 million, exceeding $200 million for the first time. Marketplace revenue grew 4% year-over-year. Enterprise revenue increased 3% year-over-year. Take rate. Marketplace take rate was 18.9% in Q3, up from 18.3% in Q3 2024, driven by dynamic pricing and Business Plus. A lower total take rate is expected in Q4 due to seasonal managed services volumes. Gross margin, 77.3%. Non-GAAP operating expense, $101 million, or 50% of revenue, down from 57% in Q3 2024. Adjusted EBITDA, $59.6 million, with a record margin of 29.6%. GAAP net income, $29.3 million, up 6% year-over-year. Free cash flow, a record $69.4 million. Share repurchases, $31 million used to buy back 2.1 million shares. Cash and investments, approximately $643 million. Guidance for Q4 2025. Revenue, $193 million to $198 million. Adjusted EBITDA, $49 million to $52 million, 25% to 26% margin. This guidance includes incremental costs from the ASIN and Bubby acquisitions and integration costs for Lifted. Full year 2025 outlook, raised revenue, $782 million to $787 million, primarily driven by marketplace strength. Adjusted EBITDA, $222 million to $225 million, 28% margin at the midpoint, representing over 6 points of margin expansion versus 2024. Non-GAAP diluted EPS, $1.35 to $1.37. Long-term targets, reiterating a 35% adjusted EBITDA margin target. Capital allocation, investing in organic growth. Returning capital to shareholders through share repurchases, $100 million announced, $31 million in Q3. Strategic M&A to accelerate the roadmap. Key management statements. Hayden Brown on AI. Upwork demonstrates how embracing AI technology can positively impact both top-line and bottom-line performance, and our solutions are increasingly essential for other companies looking to realize this potential. Hayden Brown on Lifted. Through Lifted, we are now able to provide talent sourcing, contracting, and workforce management across every type of contingent work. Not only is this a unique value proposition in the industry, but we are the only player in the market with a comprehensive digitally native solution that's purpose-built for enterprises and integrates seamlessly into their existing systems. Erica Gessert on financial execution. We are executing with tremendous velocity, and we are seeing very strong growth potential across multiple strategies. As a result, we have resumed GSV growth 2 quarters earlier than planned. Erica Gessert on Lifted integration. We continue to expect these acquisitions to contribute to top-line growth as they ramp in the back half of 2026, while being somewhat margin dilutive throughout the year as we absorb the cost structures and invest in integration and launch. We expect Lifted to be meaningfully accretive to GSV, revenue, and adjusted EBITDA in 2027. Hayden Brown on AI and hours per contract. AI work is actually a growth driver of hours per contract, not a suppressor. This substitution usually pertains to smaller projects. For us, only about 5% of our gross services value comes from tasks under $300, which is likely where we face the greatest impact from AI changing value negatively. However, overall, we've noticed that substitution levels in categories influenced by AI, including writing and translation, have stabilized over the past few quarters. The more significant effect of AI for us is that it is leading to a shift away from traditional full-time roles, creating new opportunities where businesses no longer require a full-time employee because AI can handle part of the work. Instead, they need someone to help with that work, which is increasing value and demand in the contingent work ecosystem, particularly for Upwork. Risk factors. As inferred from the transcript, macroeconomic conditions, while noted as stable in Q3, any significant downturn could impact demand. Integration of acquisitions. The successful integration of Bubby and ASIN into Lifted, and their subsequent impact on revenue and margins. Enterprise sales cycles. Large enterprise deals for Lifted have long sales cycles. Competition. The competitive landscape for enterprise contingent workforce solutions. AI adoption and impact. While seen as a positive, the evolving nature of AI could present unforeseen challenges or shifts in demand for specific services. Seasonal trends. Q4 traditionally sees seasonal slowdowns, particularly in enterprise managed services. Highlights return to GSV growth, 2% YOY. Record revenue exceeding $200 million. Record adjusted EBITDA and margin. Successful integration and impact of AI on platform and category growth. Strong adoption of Upwork Business Plus. Launch and positive early reception of Lifted for enterprise expansion. Improved active client growth and significantly lower churn. Sustained increase in hours per contract. Raised full-year guidance for revenue and adjusted EBITDA. Strong free cash flow generation. Lowlights Q4 guidance anticipates a sequential decline in revenue and adjusted EBITDA, partly due to seasonality and integration costs. Acquisitions, Bubby and Asin, are expected to be margin dilutive in the short term due to integration costs and investment. The full impact of Lifted on revenue and profitability is still some time away, with meaningful contribution expected in 2027.